Today we're going to talk about what is a power of three. Now, I'm not going to give you a 1-hour lecture on a power of three. I'm going to keep this as basic as it has to be, as quick and painless as it has to be, and also while keeping the lesson very, very, very effective and straight to the point. Let's do that. So the power of three comes from an ICT concept. You have a range where you're accumulating, or it's a retail accumulation. You either break down from said range or you break up from said range without going too far away in either direction. And should you come back within the range, you can get an aggressive move towards that side or towards that side where this was a trap or this was a trap. Now, to my knowledge, I don't know if he really goes with the whole, hey, it can't break up too high here or it can't break down too low here, but that's my rule. I added that rule myself. I never watched many of his videos, but I've seen a couple. And I kind of, I know a friend of mine was a big believer in the whole PO3 thing, and I kind of have my own twist on it. If you think about it, all it is a redistribution. It's a way of redistributing or reaccumulating. So a classic sign of this would be, say price is in a downwards trend, and we start a range low and we pull up to a range high, and we get that confirmation of the range, and then price, it doesn't quite take the low. It starts going up like this, right? It starts building liquidity, producing itself as a range. You have your range formed from low to high. You haven't really gotten any deviations on the low, but then all of a sudden you get this. Maybe you got a little peekaboo outside the range here. You pull it up, and all of a sudden you see that, oh wow, we have this amazing looking liquidity curve here. So this would be a form of what I call redistribution, by the way, guys. So we have that liquidity forming from the bottom up towards the top. I prefer that it's a curvature form, okay? Trend line is okay, I suppose, but you more than likely see it this way rather than the trend line approach. It's more common to see a curve than it is a trend line in a range, but you'll see eventually that price will pop outside that range. So as long as swing structure doesn't break, okay, now watch where swing structure is. Apparently I did a very terrible drawing at swing structure here. So I want you guys to cancel that part out, and we're going to look at it from a down, up, and then down again, whereas this is just fractal internal structure, and this is the swing lower high. So as long as swing structure does not transition here, then we should, in theory, produce some sort of range environment. If we produce a range-bound environment, and we take the high of that range at least once, so this is our range high and this is our range low, we take that high at least once within that range, and then we start to come back inside the range. Now, obviously, to get back inside the range, what needs to happen here? You're clearly breaking structure. Price action is showing you that demand is not in control any longer, and you are closing back in the range. Therefore, you're breaking these swing points here, or these internal structural points. So transition of structure is a must-have. So you got your transition of structure the moment that you lost this range. That only happens if you take that high first. Otherwise, you would have to break this low to confirm this. So we wait for a move back within the range, and then in theory, you should get an aggressive pull away to the bottom of your range. So that's how we look at it from a redistribution standpoint. In this model right here, power of three would be the 3-box method, okay? This is my version of it, but the 3-box method is basically to say that, hey, this is accumulation. This is manipulation above the range high. So here's the accumulation in green. Here's the blue. Here's the manipulation of the retail positions. We can put that text on the high here. And the move down after the close back within the range is what we call the expansion away, or the continuation of the overall trend. Now, my rules are a little different. As I mentioned, you're not going to find those exact rules from him. He doesn't even use curvature liquidity, from my understanding. So yeah, my rule is that we have to have something like this. Otherwise, I'm not really interested. Now, can it take the low of the range first? Yes, it can, as long as it forms something to follow. So even if we took the low here, as long as we don't break too far above this range high, then you're okay. But if you do take that low and you do close above that range high to form this little range here, you need to see, some kind of structured break. So if you don't take this high here, this guy got to go. Remember that rule. All right. So now we'll look at an example of a reaccumulation in an uptrend. Let's say price is forming this swing structure uptrend. This is fractal structure, and here's your swing structure forming again. So we have a swing structure higher high, a swing structure higher low, and a swing structure higher high. You can ignore that part. It's not a big deal. And then you get a range being formed. So price comes down and forms a range between here and here, possibly. Goes a little bit lower. Okay, we got to pull this guy down. Perhaps to trade a little bit lower down to here. Okay, pull it down. Trying to give you guys a realistic example here. It's not going to be picture perfect and maintain this fractal trend, that's for sure, or internal trend. Not always. So in this case here, we have a range. Okay, same idea applies, but it's a little bit different this time. So we want price to form some sort of liquidity towards the downside here, right? Perfect little liquidity crunching up. It's always better if it looks like this, where it's contracting, right? You see price contracting here, right? That's always the better play. Do you have to take this low? No, you do not. And then what we're looking for is a breakdown of the range. So if it breaks down from that range, as long as it doesn't go too far down and break the structure of the swing structure down here, then you start forming a range directly under that range low, then you might have yourself what we call the retail accumulation, the manipulation of those retail positions, and upon closing back within the range from the miniature range and breaking structure back inside that range, we pull him over, then we could look at a very aggressive expansion of an upwards trend, also known as a reaccumulation effect. And this would be the reaccumulation. So ultimately, on a higher time frame, you may not even see any of this. If you're looking at this area, you might have just marked this as your high, this as the higher low, and this is a higher high, right? Where it was just up, down, up again, right? So very common phenomenon, really. Let's see if we have any recent examples of one. Let's go to the 4 hour, I suppose. So we actually have an example right here. Okay, right here. So it's not a picture perfect example, no, but it's still an example nonetheless. So we're going to look at it. So price was in a downwards internal trend. It wasn't a swing trend. This is a swing lower low, and this is a swing lower high, but contents in here are its own range. So do you have to play the swing structure ones? No. You just got to play some sort of structure. So in this case here, we made a lower low, a lower high, a lower low, lower high, lower low. Then we broke structure up. So we have to pull the range high from here down to the range low here. We could have also pulled from this guy to this guy, I suppose. You could have said, no, I'm going to pull from this guy to this guy. But I mean, I would rather pull the other way. So we'll pull from this way to this way, I suppose. And as we can see, price tried to break up from that range. It's forming a range near the high. So it's not your picture perfect example where the entire contents of the range exists above here, but it's still possibly a manipulation. Because if you wanted to, you could have drawn your range from here to here. Okay. And unfortunately, this example doesn't curve up though, but this one does. So you have that curling up effect. Okay, great. That's what we want to see. So there's stop losses remaining. You get the curvature of liquidity. That's what we like to see. And ultimately, you could say, well, you know, this could be the accumulation. This could be the manipulation. And we could end up with a downwards expansion away because of that curling up effect. And you got that very, very aggressive downwards expansion away, right? Looks pretty solid. Here's another example. Now, this is an interesting example because it's not really, you know, forming that curvature per se, at least not, well, kind of actually, but it ultimately broke up higher. It didn't go all the way down into the crypto abyss essentially, right? And that's what I was trying to show you guys, some strong ones, but we'll go with this one as well because it still hit the range low. So we have a range high and a range low, and this is a very common model. You'll see it quite often, really. These were the initial range points, and then you could have said, well, you know what? Here was the retail accumulation. This was manipulation, but you didn't take out the high, so it didn't really confirm itself until right here. In this example, price was curling up here, and then you had the downwards expansion towards the bottom of the range. Now, that is possibly one way of looking at it. The other way is to use the bigger range. Could we create a bigger model here? Could price end up curling towards the upside like that? We'll see. And it does. And now we're starting to show signs that the range high is breaking. Okay, and your swing structure point would be this high over here because that's down, it's up, and then it's down again. So it's not really having to break that guy. Heck, I'd be a little bit nervous even if it broke that guy, but usually you want it somewhat relative to the range, right? I wouldn't want it going more than 50% of the range size. So you could even go like this. And then you could go like that. You would not want it surpassing that line there, right? And you can get an eye for it, really. Generally, when these models work, you don't go that much higher. It's basically just a little pop under or pop above the range and you form the new range, right? So now what we have is a possible accumulation here, a manipulation, and then another expansion away. I'm not going to use all different colors this time. I just want to keep this quick and straight to the point, as I mentioned before, and then boom, there you go, right? Perfect little model right there. Example of redistribution. So as I mentioned, you'll see these things all over the place, really. They are all over the place. In fact, there was one here as well, it looks like, but you would have been playing it a little bit differently. This is a funny looking range, but it's still a model. So this is a range low because it came in a downtrend. We know we pull from low to high. So even though structure was curling down here, this was its own model, actually. It was its own reaccumulation model. You had a 1, a 2, and a 3 from this local range. Price came up and hit the high because of that 1, 2, 3 accumulation. And then what happened is you had a curling up effect from this range low, knowing that this low has never been taken. So you had the retail accumulation. You had the manipulation. Was the initial high taken out of that range? Yes, it was right there. Right? It was taken out with this wick right here. And then you had the aggression back within the range. And once you broke structure coming back within the range, that could have justified a short trade on its own right here with a stop above here all the way down to that range low. There's your downwards expansion away. Look how nice that was, right? Beautiful, beautiful, beautiful. So as you can see, these are all over the place across many, many, many time frames. Sometimes you don't get the picture perfect curve. You will not always get that, but other times you will. So in this example, we have another one right here, perhaps like a lower time frame one. This is the opposite situation where you had a range high and you had a range low. Okay, ultimately, you would have ended up with this as your range. You broke down from the range ever so slightly, perhaps to grab the liquidity under these lows here, it looks like. Right, you took out that liquidity. And ultimately, this was the accumulation. We have manipulation. Did we take out the range low? Yes, we have. If that's a range, you took out that low down here. And you could draw it in again, like I mentioned, from low to high in a downtrend. And then you swept that low. This was the final product, but you don't need to really adjust it that many times. And then you have the expansion away. Nice, right? And that's an example. Did you have the liquidity curve? Well, we forgot to check, but I mean, I hope you guys seen that this time. Little test, right? Little test there. So we had the curvature of the downwards liquidity. Makes for a very aggressive expansion away. So without the curvature effect, which I'm pretty sure nobody else looks at with this model, you don't really get the best models. I noticed that a very, very long time ago. And in fact, I'm on ETH, but like on Bitcoin, for example, you get plenty of these really, really nice models. In fact, we've had many of them in the last few years alone. In fact, the model that I called from this low over here in November of 2022, I actually had a stream and many posts where I was looking at this from a higher time frame perspective. I noticed right away that, oh, wow, we got a bigger PO3 at play here. We have a range low forming. We had a range high forming. Price broke above that range right here. It only wicked above this time. And then it started to close above on lower time frames right here where we took the initial high out. So this was my accumulation. I seen the curvature of liquidity forming upwards like this. I seen this, and then we had the aggression back within the range coming down to that range low. But look what happens next. This is the fun part. Watch this. Sometimes you flip-flop these models. So then we had the downwards curvature of liquidity, right? Not really the perfect curve, but it's still a curve nonetheless. This guy didn't take out that guy. This guy didn't take out that guy, essentially, right? So now we end up forming a range, barely breaking below that range low, and we had the beautiful confirmation of sweeping the initial low of that range, my favorite part of it, right? And then reclaiming the range high. And I recall being on a stream, it doesn't look like we swept it, but if you zoomed in, we have. You can check the low of this candle, and you can go to the low of that candle on your own time. It definitely has. But we ended up getting a move back within the range, closing structure back within that range. And then look what happened. We had the accumulation on a broader scale. We had the manipulation. And then we had the expansion away, which is why I sold a lot of my spot positions at this high, because that was my overall objective, right? I'm very strict with my rules. And I'm sure many of you folks that were around back then watching my TA, you would have absolutely nailed that with me. In fact, many of these moves we nailed. Well, let's see if we can find another model. So this was actually when Bitcoin was en route down in early May of 2022. Very aggressive move down. We had the same sort of thing playing out here. So we had the curvature up of liquidity, knowing that these lows have not been swept out or engineered in any way, shape, or form. But first it was curling down. Okay, so you had the curling down range here in a lower time frame. You came up here, but we ended up with this ultimately where you're curling down and making that bigger curve. We talked about this in one of our curvature videos, but ultimately structure formed an accumulation and manipulation with the range high of the mini range being engineered in some way, shape, or another. And we have structure closing back within the range very, very aggressively. Now, it popped up a few times, actually, it looks like. Ultimately going down and continuing on its merry way with a very, very, very aggressive downtrend, right? So that was quite easy to nail if you had known how to look at this range theory. Same thing here. We have a swing low and we have a swing high. We have the curling up effect. As you can see, I'm going to outline it with my mouse here. We're curling up, curling up. We have the accumulation. We have manipulation. And then we have the downwards expansion away. Right? I'm not going to change the color of the boxes. You can pick whatever colors you'd like to, but as you can see, it's a very, very, very good indication of a classic redistribution or reaccumulation. I say re because you technically cannot distribute in a downtrend. It's not the proper terminology. It's a redistribution in a downwards trend. So if structure is forming a lower low, lower high, lower low in a very aggressive downtrend, you are redistributing. Okay, not so much distributing. Maybe in a lower time frame, you could up here have a distribution, but from a broader perspective, a macro-like perspective, it's a redistribution. Same thing in an uptrend, right? So if you have an uptrend, it's a reaccumulation. Okay, not so much an accumulation unless you're talking about maybe one that happened here or in here in a lower time frame. But this whole area would be what we call a reaccumulation. Whereas in a typical downtrend, you would have accumulations, classic 1, 2, 3. You still get those sometimes with redistribution and reaccumulation models, but the more common approach for those would be something like this, like the power of 3. And they're the easier ones to play, really. And of course, if you went down, you could have traded this as well, which is what I usually do. I always take advantage of the manipulation range. Every single time I take advantage of that manipulation range, and my entry is somewhere up here, even before we get way down here, okay? Every time. Why? Well, go through the Wyckoff series and you'll understand why. But, it's a very, very effective model nonetheless, and you'll see it across any asset, really. I love playing this model. I can't take credit for the name of it, but I can take credit for how I developed it. And in conjunction with my rules of thumb, I find they're much more effective than any other way to look at this model, really. I haven't really heard anything similar for rules with this, but I just call it redistribution and reaccumulation for the most part. But I usually try to avoid the boxes unless I'm feeling fancy that day. But you can avoid the boxes absolutely and just look at this from a range, double range perspective, essentially. But that about sums it up, right? Kept it short and to the point. I didn't talk about Thanksgiving dinner. And yeah,